Hello everyone, today's video is a continuation of last week's video, and it's a complex video. Today, I'll continue sharing 2 trades, also analyzing 3 timeframes, but not entering trades, based on the confluence of 3 timeframes. This is an advanced video, so it might be a bit harder to understand. But if you fully grasp it, you'll truly see profits everywhere. As usual, the 3 timeframes I use are still 4 hour, 1 hour, and 15 minute. First, we still need to look at the largest timeframe first, the 4-hour timeframe. This is the key level of the 4-hour timeframe. The 4-hour timeframe is currently in an uptrend. The price hasn't broken through this key level yet, so the trend remains an uptrend. This is the key level of the 1-hour timeframe. The trend on the 1-hour timeframe is a downtrend. The price hasn't broken through this key level yet, so the trend remains a downtrend. Okay. Now we have the 4-hour timeframe trending up and the 1-hour trending down. The price seems to be moving upward. It looks like it wants to break the key level of the 1-hour timeframe. So what should we do now? Now we wait. We wait for the price to break through the key level of the 1-hour timeframe, so that the 1-hour trend reverses to become an uptrend. Then we can apply the method of entering trades based on the confluence of 3 timeframes, which is very good. I switched to a smaller timeframe to observe. The price now has touched the key level of the 1-hour timeframe. An engulfing pattern appears, a reversal pattern in this case, but this reversal pattern in this case doesn't indicate that the price won't break through the key level of the 1-hour timeframe. It only indicates that the price hasn't broken yet, not that it won't break. Because the current trend of the 15-minute timeframe is an uptrend. This is the key level of the 15-minute timeframe. The price hasn't broken through this key level yet, so the trend remains an uptrend. When the price reaches the key level of the 15-minute timeframe, we expect it to form a large bullish candle, pushing up to continue the uptrend and breaking through the key level of the 1-hour timeframe, so we can enter a trade based on the confluence of 3 timeframes. But instead, a pin bar candle like this appears, which is not good at all. It shows that this key level has weak buying pressure. It's highly likely it won't continue to rise. Let's see together. The price has broken through the key level of the 15-minute timeframe, so we determine that the trend of the 15-minute timeframe has reversed from an uptrend to a downtrend. Because of this, I entered a sell trade in this case. Stop loss up here. Target down to the key level of the 4-hour timeframe. The risk-reward ratio is 2.6. Why could I enter a sell trade in this case? Let me explain. Currently, we have the 4-hour timeframe trending up, but the trend of the 1 hour is down, and the 15-minute is also down. We have a confluence here. A confluence of the 15-minute and 1-hour timeframes, both showing a downtrend. This is stronger than the uptrend of the 4-hour timeframe. It's not necessarily stronger, but it indicates that at this moment, the sellers are stronger than the buyers, and the price will likely continue to go down. How far down? We don't know, but it will definitely go down to the key level of the 4-hour timeframe, because down here, there's strong buying pressure, so when the price reaches there, it might reverse and continue the uptrend. Moreover, I'm following the smaller wave The current smaller wave on the 15-minute time frame is a downtrend. I sold in a downtrend, which is very good. Stop loss placed above the key level of the 1-hour time frame. Target before the price reaches the key level of the 4-hour time frame. In trading, there's something very interesting like this. The more patient you are in waiting, the more opportunities the market gives you, better opportunities to enter trades, a safer and better opportunity. The trend of the 15-minute time frame now is still a downtrend. The price has formed a double top pattern. A double top pattern in a downtrend confirms that the downtrend will continue. Moreover, the price has broken through this low, which proves that it will definitely continue to decline. That's why we can enter a trade. A sell limit in this case, placed right at this low. Stop loss is up here. Also targeting down. The target point of this trade has a risk-reward ratio of 6.64, which is much higher in this trade. That's why the more patient you are, the better and safer your trade entry opportunity. And this trade hit the take profit. As I mentioned in the previous video, when the price hasn't reached the zone of the key level of the larger time frame, it hasn't reached the strong buying zone. Even if it rises, it's just a retracement wave. It will have to continue going down to reach the strong buying zone. Then the price might reverse. The price has now reached the strong buying zone, the key level of the 4-hour time frame. So now, will the price continue to rise or will it decide to break down? Okay, now, let's move to our next trade. This next trade is a bit tricky. I hope you'll understand. Now the price is touching the key level of the 4-hour time frame. At this point, we just wait. The best scenario now is if the price breaks the key level of the 4-hour time frame, then we'll have a confluence of 3 time frames all showing a downtrend, so we'll enter a sell trade in this case. This is the key level of the 15-minute time frame. The price has now broken through the key level of the 15-minute time frame. This indicates a downtrend has reversed to become an uptrend. So what do we have now? We have the 4-hour time frame trending up, the 1-hour trending down, but the 15-minute is trending up. If you say, we have a confluence of the 15-minute and the 4-hour time frame, both trending up, that's not correct. Confluence is only considered when 2 time frames are adjacent, like the 15-minute and the 1-hour, or the 1-hour and the 4-hour, or the 4-hour with a daily trend. But we can't apply confluence between the 15-minute and the 4-hour. We can't skip time frames like that. If we skip like that, we might consider confluence between the 15-minute and the daily trend or weekly trend. We can't account for everything. So in this case, we don't have any confluence. No confluence, so what do we do? But in this case, I can still enter a buy trade. Let's see how I do it. This is the key level of the 15-minute time frame. The key level of the uptrend. The price hasn't broken this key level, so the trend remains an uptrend. So now I determine this downtrend is just a retracement. Why do I determine that? Because if this downtrend is not a retracement, but the price actually drops, this is a strong key level. We switch to a larger time frame and look here. It's not a key level of the larger time frame. It's also not a Fibonacci price zone from 0.5 to 0.618. It's nothing. So the trend continues to rise. I determine that this downtrend is just a retracement, and the price has reached the key level, the final point where the retracement can retrace to. That's why I entered a buy trade, in this case. Target to the key level of the downtrend of the 1-hour time frame. You might still wonder why I could enter a buy trade when I haven't confirmed that this downtrend has ended. As I said, I confirmed this is just a retracement, and this is the final point where the retracement can retrace to. It can't break through this key level. That's why I entered a buy trade early in this case. And this buy trade hit the stop loss. At this point, what do we have? At this point, we've confirmed that the retracement has ended. It ended because the price broke through the key level of this retracement, but it came back to retest this key level one more, to this low one more time. Although it didn't form a strong reversal candlestick pattern in this case, it's not an engulfing candlestick, but the price still continued to rise. It still supports an uptrend structure. That's why I entered another buy trade in this case. And this trade hit the stop loss because the market doesn't always go up in a straight line. It can go down and sweep our stop loss. That's normal. I continued to buy, targeting here with a risk-reward ratio of 3.85. This trade hit the take profit. The trend rose and broke through the key level of the 1-hour time frame. And as you can see, if you wait, the longer you wait, the better opportunities the market gives you. They're always good and safer than the first opportunity. But in this trade, the second opportunity was safe and it won. But if I entered at the first moment like this, I hit the stop loss. And that's everything that happened in my mind when I looked at the market. In this video, I find it really hard to explain what I was thinking, to make it clear and easy to understand. I don't know if everyone fully understood. Trades like this, I probably won't or will rarely share on the channel. Because to do this, you need to be proficient in analysis and have a high win rate. When entering trades based on the confluence of 3 timeframes, when everyone's skills improve, I'll share more advanced trades like this. Goodbye everyone, see you in the next video.